you beloved millions. It is with our greatest delights, guys, to be back. Guess who's back? First class is back. Guys, it is with my greatest delights to be here serving you guys once more. I'd been away for a couple of, probably the whole week, and I didn't take any trades this week. However, I'm back today to come share with you guys and just do a proper trade recap and market overview over the next week. What should we expect? What should we see? Right, guys? So I hope God has been great in your life. I hope all of you are doing very well. I appreciate the support. While I wasn't there, we got an increase in followers and subscribers. So, guys, for those of you who just recently subscribed and viewed any of our videos, it is once more the greatest delights, guys. I'd been away attending a graduation party for my sister whom is graduated, and so I wasn't in the province or state in which I normally live in, and so yeah, that's why I wasn't filming, right? So but I'm back here, I'm back in my home, my nice spacious apartment with my beautiful wife, and guess what, I'm going to be sharing more of what has it happened. I'm just going to give you a trade cap review, guys. So thanks for staying till this far. Let's probably dive right straight into it. So first and foremost, I want to go into the weekly and just check what the trend is, what the trend has been. So first and foremost, we have a high, hello, high, hello, high, hello, lower high. Why is this a lower high point? Now remember, this is the highest point the market has been ever. 21 November, as date as saying, was the highest Nasdaq has ever been since it ever existed. And did we come back to break this high? No. So we made a new low here, right there, and made a new lower high point right here, and lower low, and another lower high. So what has happened in the couple of 2 weeks, right? So we broke this level here of structure, which was our recent lower low. So it means we have a new lower low point. So last week we did break this level, so we already knew that the market was bearish, right? Not only did we just break this lower low point, we also broke a good trend line which held 3 touches. So we broke a trend line on the weekly to the downside, and the market is consistently making lower highs and lower lows. So it means that we were bound to be bearish all the way. So I'm gonna go into the 4H. So we won't go into the daily today because we're not doing a market analysis of what we expect today. We're just doing a trade recap, right? So I can see one thing is happening here. The market had been ranging, right, for the last 5 days. We had been ranging and we had been bouncing up and down on the same place. So if remember, the market is ranging and on our time frames, but we happen to have confluence, and we know what I mean by confluence. We know which direction, which trend the market is trending. It means that we can afford to go into our lower time frames, and going into our lower time frames we can look for trades to take, right? So usually I do go into the M5, and let's just start where the range started, right? So these are the trades in which we missed out in. So remember, the trend is bearish, so let's see what selling movements could we have capitalized on if we were active in the market. So right, looking at this area right here, we of course were ranging. Now I'm gonna show you something. No trade, right? Okay, let's be very transparent. So you could have got a sell trade right there, and probably yes, and take profits to be there, right? So this trade could have ended up in it being a loss. So it would have been first trade loss, and then okay, let's go ahead and look for more trades. So again, remember, we look for sell opportunities. What did we see here on the M5? We saw the market make a high, then a high low, lower high, lower low, lower high, lower low, lower high, right here, right at this low high point, and we're getting a probably the touch. Yes, we are getting a third touch of this trend line. Would have taken a sell, right? So actually we want to do 10 trades today, or let's do 5. Let's do 5 and then see where it leads us, right? Remember, this, all of this wasn't back tested. I just thought, let me just do a video for the people, right? Video to just show you what could have been and what it is to be. So of course, let's keep the same risk. Our stop loss in around 190 pips, and take profit would have been at this level right here. Why this level? Well, looking back, you can see it's a level which held 1, 2, 3, 4, 5, 6 times, right? So would have taken a trade right there, and I'm gonna show you guys how that you could have managed this trade, how that I manage it. So first and foremost, the market did, of course, sell, right? So while it's selling, we don't automatically let me quickly close in and break even and all that. No, the market sold till this point, and we had a little push up, then we broke to the downside. Now right after breaking to the downside, this is where you could have pulled your stop loss into break even in around this area, right? And then the market did push up. Of course, it pushing up means that now you don't have control over the trade. All you can do is just wait, right? Push up, high, and then the market started again pushing low, pushing low, pushing low. Should the market break this point, then we can adjust our stop loss into greater or lower places for greater profits. So until we broke this level right here to the downside, this is where maybe you could have shifted your stop loss to around above this area, this ranging area, and target would have been hit. So that would have been 2,366.8 pips into your bank account. If you're using a 0.01, that's $20. If you're using 0.10 lots, that's $200. One lot is $2,000. 10 lots is $20,000. One lot is 2,000. Yeah, 10 lot is 20,000. 100 lot, $200,000. Convert that, it's 6 million, and it's 6 million in rands. $200,000 is 6 million, and around that it's actually 8 million. So rands. And anyway, this is not a video for conversions. I'm just here, guys, to just analyze the markets with you guys. So what did I just do? Let's undo. So that's trade number 2. It resulted in us getting that much profit, right? So we're gonna go ahead and look for more sell trades. Let's see. Okay, market did keep on pushing down and found some level of support here and let a push up, made a new high, low, double top formation. Got a sell. Now again, I have to be transparent with you guys. I'm scalping on the M5, so I'm probably drawing trend lines everywhere. I would have drawn that like that, and I would have drawn something like this. And as soon as the market did close below and break this level, know very well I would have sold. Keep the risk the same, which is 19. I would have sold and maybe targeted this. This is a weekly support area. I would have just managed the trade. Let's say okay, 100. Right, so the market would have, of course, pushed down, as we see. Would have had a push down like that. Remember, I don't break in profit until the market breaks this level of support that is created here. So yes, the market would have pushed down, then would have came back up, push down again, up, push down, then break us out. Okay, that's another stop loss, right? Hit. So would have recorded our lessons. What did we learn? Whatever we learned, write it down, then go back again, analyze the market. Right, the market did push up and push down, made a new high there, then we broke down to the downside. Again, let's be transparent. I'm always consistently drawing trend lines, right? So I would have had something like that right there, and as soon as the market broke my trend line, taken the sell like that. Remember, keep the stop loss the same, 19, 20 $20 numbers game, right? So this trade would have played out as said, down, push up. As soon as we break the support right here, as soon as we broke the support, excuse me, that's when this comes in. Let's delete that so it's tidy. So also delete that. So as soon as the market broke this level of support, break even, move my stop loss into break even. Okay, and the market would have hit our profit, which is 1,500 pips. So we pretty much in profit by what? We will add up all these numbers, and we've taken 1, 2, 3, 4 trades. So would have to look for the last sell trade again. Remember, you can buy if you want to buy, but to be on the safe side, I know the weekly is bearish, so I'm going to be looking for bearish trades, right? So let's look for the last trade. Remember, take one trade a day. For example, reason I said 5, it's because of I would be taking one trade on the M5 per day. One trade is enough, maybe 2 positions or 3 positions anyways. So yes, guys, I'm so happy to be back. I have to say that again. It's my greatest delight to be back filming for you guys. You can see the time I'm staying up this late because of I really want to do this. I'm not obligated. I am not. Alright, I can keep this for myself, but for the love of helping somebody else, it doesn't matter who you are. I want to help you, and I know this video is going to provide great time, great value for your time. You guys don't pay me, but your time is valuable, right? So if you're going to be watching this, I'm supposed to be giving you best value for your time, right? So okay, I appreciate your support, and let's get right back into it. So the market did tank down, right, and made a new lower high, lower low, and push up, a hello, and this crazy area right there. So okay, what do we do now that the market is here, right? Remember, we're still looking for sells. I would have drawn something like that. Okay, would have drawn something like that, anticipating the market to come break the level and then probably push back. And so did we get that? No, we didn't get that, but let's see what happens, right? Then we market pushed up, push down, push up. Remember, it's ranging, push down, then we got a break of structure right here. So would I sell? Yes, I'd sell. Why? right? This is a low high point, new low, right? So I'll obviously sell, and that would be my last trade on Friday. Remember, keep the risk the same. So see, it's 19. Anyways, let's put it at 20 and then take profits would be in around here, right? Actually, my take profit would be here, right? So look at that, risk to reward ratio of 11. Imagine 1:11. Oh my god, that's how many. Imagine having a 2% increase a day. That's huge profits, right? So of course the market would have stalled us out at loss, meaning that out of the 5 trades we took, we would have hit take profit on 2 of them, right? 2 trades would have hit take profit. 2 trades hitting take profit means, let me bring out my calculator. It's actually nice doing these videos at night. My wife is asleep and my child is asleep as well, so anyways guys, so let's record the first trade. First trade we hit minus 19 pips, right? Stop loss. And then second trade 236 plus 236 pips, 2000. It's actually 236. Anyways, second trade, take profit, minus 20. And that trade, take profit, plus 154, minus 1, 2, 3, 4. Second trade will hit stop loss. So out of 5 trades, you would have benefited 3,000 pips, 3,332. Meaning if you had a $10 account, for example, and you utilize the strategy, actually $10 is small. If you had $30 worth of your account and you utilize the strategy using one position at a time, you would have profited, whatever they call it in English. Yes, you would have gained this much profit. I'm a numbers guy, not an English guy. Anyways, your account would have been sleeping on $332 profit. That's what? That's a huge increase. That's not even 100%. That's like 10,000, close to 10,000% increase. 5 trades, just knowing the trend and using the lower time frame and taking 1 trade a week, knowing that the market is ranging, right? So it would have benefited you this much. And if it's $100 account, or you can afford to increase your risk, then that would have been what, $3,000, and the increase goes on and on and on. What's the key here? Repetition, consistency. If you know what you want and you definitely have a clear idea of this is what we're gonna look for, we know that the monthly is bearish, and we're gonna look for sell opportunities on our lower time frame. I prefer the M5 because of it's a combination of the M15 and the M1, and it provides a good ratio to win as well. So you would have lost, well, you would have learned a lesson Monday, Tuesday take profit, Wednesday loss, Thursday profit, Friday loss. Withdraw your $300, go spend it on something, right? Isn't that good value for your money? So this is all I had to tell you guys today, and I am so happy and grateful. And look at the opportunities that came in after. We only caught these opportunities right here. There's a lot of them that happened, a lot. Another one I'm gonna show you. I saw this, I think yesterday in the morning. I didn't look at the chart the whole day, but yesterday was Friday, right? I'm not sure if yesterday was Friday or not, because of, oh my god, I was busy. Actually, yesterday was Friday, so I did look at this in the morning. Let's talk about this trade idea. So the market, right? Let's start again. high right then, right? And push down, made a low, low high, low low, range. While the market is ranging like this, it's good that you want to trap the market and draw some sort of, this is my support, diagonal support. So some people use support and resistance, which is horizontal. I use the diagonal one, which comes in the name of trend lines. So of course made a low, then bam. Now I want to show you something interesting. As soon as the market comes here and makes a low high and doesn't go above and range above, but then ranges here and then breaks the trend line, well, that would have been a good indication for us to take the trade. We know that we are bearish and we just made a lower high and broke a trend line, which is support. We would have capitalized on a sell trade. Remember, keep the rest the same, and look at how much the market would have given us. I'm gonna show you guys how we could have managed the trade. Pause, delete that. So this would have been a very quick trade. Would have entered right there and boom, sell off, push up and push down. As soon as we break with support, then probably you can bring your stop loss in around this area above the area that was broken, right? So push down, push up, push down, push up, like that. Adjust your stop loss, trade, like that. Adjust, excuse me, right? Actually adjust to that level, push up, push down, push up. We're hoping the market breaks this level for us to be able to shift our stop loss in between these areas. So yeah, we had a head and shoulder pattern here. For those of you who trade head and shoulders, it's a head and shoulder pattern, and then we did break this level right here, which means we would have been able to probably push our stop loss in around this area, and the market would have came back right there, like that. Low high, break of structure gain, pull it to in around this area, right? And would have been taken out right here. So that would have been how much? How many? 5,000 pips. Imagine 5,000 pips. You could still take 4 losses using this strategy, and the fifth one would have been what? Paying the remaining of the month's fees and everything. But you see, this is all beauty of the charts and consistency and knowing what you want, So how is it am I able to spot movements and tell, and where do I get all the information? Where am I getting all that? I feed you? Well, it's all experience. I put in the work, I put in the time, I backtested these trades and the strategy. Over 1,000 trades I actually backtested. I'm not counting live trades in which I took. I once sat down and I was like, I'm gonna backtest 1,000 trades to see what the outcome was, and the outcome was good. Over 800 trades had take profit, and the rest were unfortunate. And that's why I have this philosophy and strategy in me. Of course, it's not new. Everybody does know what the risk ratio and risk management is. It's no different, but it depends on who is telling you what and how is it they telling you. So I know I do my job like this, and there's only me who does the job like this respectfully and by the grace of God, right? So this is how we do it at First Loss, and I thought, guys, why not share it with you guys? It's been a nice long video, and we will be back, guys. I'm so grateful you stayed till this far, and it means a lot that you committed and determined to work and succeed, guys. So I'm just gonna cut the video right here. I'd love to speak more about the market, but let's leave that for another day. Remember, guys, practice. If you just focus on the skill, then days like this where you start speaking about money come. Now money just becomes a factor. Pips become a matter of how much pips you want, right? So that's our information and feedback and give back to you guys, to you millions, today, tomorrow. All of you guys from Spain, Europe, all over the world. This is for you guys. So till we meet again, God bless, guys. Trust the process. We love you. Let's do this once more, guys. Thanks for your support. Cheers.